22-year-old college student Mary stared at her phone screen in complete shock. Her credit score had jumped from 580 to 720 in less than 4 months. She hadn't taken out any new loans, hadn't suddenly become rich, and she definitely hadn't hired some expensive credit repair company. Instead, she'd stumbled upon a few simple tricks that most people have never heard of. The craziest part? One small change to when she paid her bills completely transformed her financial life. What Mary discovered was that timing isn't just everything in comedy, it's everything in credit scores too. But before we dive into the mind-blowing timing hack that changed her life, let's talk about why the system is designed to keep you confused. For years, financial advisors have been telling people to keep their credit utilization below 30%. You know what? That's terrible advice. The people with the highest credit scores, they're keeping their utilization below 1%. If you have a credit card with a $5,000 limit, most people think it's fine to carry a $1,500 balance. That's 30%, right? Wrong. The people with 800 plus credit scores are carrying maybe $50 on that same card. They're using their credit cards like debit cards, paying them off immediately but still showing some activity. But here's where it gets really interesting. There's actually a hack that lets you spend way more than 1% of your limit and still show up on your credit report as if you barely used any credit at all. And this brings us to the timing trick that completely changed Mary's life. Most people think that as long as they pay their credit card bill on time, they're doing everything right. But here's the brutal truth. If you had a balance when your card issuer reported your account details, your utilization rate could rise unexpectedly, even if you paid off the balance when you got the bill. Mary was making her payments on time every single month, but her credit card company was reporting her balance to the credit bureaus before she had a chance to pay it off. So even though she paid her full balance every month, the credit bureaus thought she was maxing out her cards. The hack? Pay off your balance before your statement period closes. Most credit card companies report your balance to the bureaus right around your statement closing date, not your due date. These are two completely different dates. Mary called her credit card company and asked them exactly when they report to the credit bureaus. Turns out it was the 15th of every month, 2 weeks before her payment was due. So she started paying off her balance on the 14th instead of the 30th. Within 30 days, her utilization ratio dropped from 60% to 2%, and her credit score started climbing. But Mary's timing hack was just the beginning. The next strategy she discovered was so simple, it almost felt like cheating the system. One of the easiest ways to lower your credit utilization ratio is by making payments twice a month. This isn't just about paying more, it's about gaming the system to show artificially low balances. Here's how it works. Let's say you normally spend $2,000 on your credit card each month, and you have a $5,000 limit. If you make one payment at the end of the month, your balance will be reported around that $2,000 mark. That's a 40% utilization ratio, which is terrible. But if you split that payment in half and pay $1,000 in the middle of the month and another $1,000 at the end, your reported balance might only be $500. Same spending, same total payments, but now your utilization ratio is only 10%. The credit bureaus only see that snapshot balance of $500. This is exactly what Mary did, and her reported utilization dropped even further. But here's where things get really wild. Mary discovered that the credit card companies actually want to help you boost your score, but only if you know how to ask them the right way. Most people are scared to ask for credit limit increases because they think it will hurt their credit score. This is backwards thinking. Increasing your credit limit can be one of the fastest ways to boost your credit score. Mary learned that if you've been paying on time for at least 6 months, you have a 90% chance of getting approved for some kind of increase. But here's the key. You have to ask for a specific amount. The magic number? Ask for exactly 3 times your current limit. If you have a $2,000 limit, ask for $6,000. They'll probably counter with something like $4,000, which is still a massive win. But here's the really sneaky part. You don't actually have to use that extra credit. Just having it available instantly drops your utilization ratio. If you were spending $800 on a $2,000 limit card, that's 40% utilization. Now you're spending $800 on a $4,000 limit card, which is only 20% utilization. Mary called all 3 of her credit card companies on the same day and got increases on all of them. Her total available credit went from $8,000 to $22,000, and her utilization ratio dropped from 25% to 9% overnight. But the next hack she discovered was even more powerful. This is the strategy that took Mary's credit score from good to excellent. She convinced her mom to add her as an authorized user on her oldest, highest limit credit card. Within 60 days, Mary's credit report showed 15 years of perfect payment history that she never actually made. Here's how it works. When you become an authorized user on someone else's credit card, their entire payment history for that card gets added to your credit report. Their credit limit gets added to your available credit. Their account age gets factored into your credit age. It's like getting a credit score transplant. The key is finding the right person to ask. You want someone who has had their credit card for at least 5 years, has a high credit limit, and has never missed a payment. For Mary, that was her mom's Chase card that she'd had since 2008 with a $25,000 limit. Mary never even got the physical card. She just asked her mom to add her as an authorized user and then immediately put the card in a drawer. The credit bureaus don't care if you actually use the card. They just see that you're associated with this amazing credit history. Within 2 months, Mary's average account age went from 2 years to 8 years. Her total available credit increased by $25,000, and her credit score jumped by 40 points. But the final hack she discovered was the most controversial one of all. Mary had one collections account from an old medical bill that was absolutely destroying her credit score. Every month, this $400 collections account was dragging her score down by 60 to 80 points. She'd ignored it for years because she thought paying it off would hurt her score even more. The key isn't just paying them off, it's negotiating a pay-for-delete agreement. Mary called the collections company and made them an offer. She would pay the full $400 immediately, but only if they agreed to completely remove the account from her credit report. Not mark it as paid. Completely delete it like it never existed. About 60% of collections agencies will agree to this, especially if you're offering to pay in full. The collections company agreed, Mary paid the bill, and within 30 days the account disappeared from her credit report. Her score immediately jumped by 70 points. It was like magic. $400 made her 70 points richer in credit score terms. But here's the most important part of Mary's story. She didn't just use one of these hacks, she used all of them systematically over a 4-month period. Mary's success wasn't random. She followed a specific sequence that maximized the impact of each hack. Month 1. She started with the statement date hack and the double payment strategy. These gave her immediate results because they lowered her utilization ratio right away. Month 2. She requested credit limit increases on all her cards and negotiated the pay-for-delete on her collections account. The credit limit increases further lowered her utilization ratio, while removing the collections account eliminated the biggest negative factor. Month 3. She became an authorized user on her mom's card. This dramatically increased her average account age and total available credit. The results were incredible. Mary's credit score went from 580 to 720 in just 4 months. She qualified for a car loan with a much lower interest. She got approved for a premium credit card with massive rewards. And most importantly, she saved thousands of dollars in interest payments. Here's what Mary learned that most people never figure out. Credit scores aren't really about how responsible you are with money. They're about how well you can game a system that was designed to be confusing. Paying bills on time is just the baseline. It won't get you promoted, but not doing it will get you fired. The people with the highest credit scores understand that credit reporting is a game with specific rules. Master the rules, and you can achieve results that seem impossible. Ignore the rules, and you'll struggle forever, no matter how responsible you are. The most successful people don't just pay their bills on time, they pay them strategically. They don't just use credit cards, they optimize their utilization ratios. They don't just build credit histories, they accelerate it by becoming authorized users. They don't just ignore collections accounts, they negotiate them away completely. Mary's story proves that with the right knowledge and strategy, you can transform your credit score faster than you ever thought possible. The system might be confusing, but it's not mysterious. Every hack she used is completely legal, ethical, and available to anyone who knows how to use them. Your credit score is either working for you or against you. There's no neutral ground, and now you know exactly how to make it work for you.